Live from Bloomberg's world headquarters in New York, I'm Scarlett Fu.
And I'm Tim Stanovec. Welcome to Bloomberg Crypto. We'll look at the people, transactions, and technology shaping the world of decentralized finance.
Here's what's at stake today. Digital assets remain under pressure. Bitcoin holding under $70,000. It's a far cry from its October high.
We're going to speak about this crypto winter with David Bailey, CEO and chair of Nakamoto, the investor connected to digital assets. And the Trump family makes an announcement surrounding his firm.
And CFTC chair Mike Salla makes the case why his agency should regulate prediction markets.
All that and more coming up over the next hour right here on Bloomberg Crypto. But first, let's get a check on just what's been happening over the past week. Anxiety around AI, geopolitical tensions remain a headwind. Real risk-off mood that we've seen not just hit risk assets, but also, of course, Bitcoin as well. Still trying to understand, I think, a lot of people, its position in a risk-off world. Over the last 8 days, down around 4%. There was looking at, like at the beginning of last week, there could be some support around $70,000. That went down to just above $65,000 a few days later, only to rise above $70,000 and then fall to about $68,000. Once again, over the last 8 days, down about 4%. We talk a lot about the October high for Bitcoin, but let's look at the Bitcoin high for just this year, down more than 30%, almost 31%. That high was on January 14th, a little over a month ago, down, Scarlett, 31% since then.
All right, the thing that we need to keep in mind, though, that down, down, down theme has been fairly consistent. Standard Chartered cutting its Bitcoin price target for the second time in less than 3 months. Analysts at the firm now warning that the cryptocurrency could slump to $50,000 before then recovering to end the year at $100,000. Now, that is down from an earlier projection of $150,000, which itself was a downgrade from an initial target of $300,000. So, Tim, from $300,000 to now $100,000.
Okay, I'm glad you got the chart there because you were just through a lot of numbers, so I like to be looking at all those. Crypto valuations might be sinking, as we just heard from Scarlett, in the outlook too, but there are some industry insiders who continue to project optimism about the asset class. Just check out a sampling from recent interviews here on Bloomberg.
There's always some sector that might be temporarily under pressure. In this case, it's been crypto, but we're still tremendously bullish on crypto as an industry.
This is a good time to do dollar cost averaging, or even just buy directly, buy and hold. Especially if you are looking at about a 3-year time horizon.
If Bitcoin was to go down 90% for 5 years sustainably, we would need to potentially sell our Bitcoin to satisfy some of our convertible debt. It's not going to go down 90% for 5 years. It's extremely unlikely. People don't ask folks, well, what happens if Apple stock goes down 90% for 5 years?
Well, let's bring in digital asset treasury pioneer, Nakamoto chair and CEO David Bailey. Nakamoto announced this morning that it acquired BTC Inc. and UTXO Management. These are firms that are tied to you. And in the press release, you did note the company's option to acquire BTC and UTXO was previously disclosed as part of Nakamoto's proposed merger with Nakamoto Holdings, Inc. What do these acquisitions do for the company?
Well, first off, thank you for having me on. We're very excited about today's news. This is really a transformational moment for Nakamoto. Our goal is to build the most globally recognized Bitcoin holding company. And today's transaction gives us ownership of the #1 Bitcoin media asset in the world and one of the best performing digital asset managers in the world. So it's very important to the company. It allows us to further our mission of hyper-Bitcoinization, and it generates income, which I think is going to be really important for treasury companies going forward as we move into a market environment that's not just up only. So we're very excited about the news, and we're excited to talk about what comes next.
So, David, it sounds like you're still pursuing your strategy squared plan, seeding and investing in other Bitcoin hoarders around the world. If that's the case, I'm curious which geographies you are most excited about, optimistic about.
Yeah, I think the markets that we're most excited about are the ones that no one's been able to enter yet. We think mainland China is very interesting. Saudi Arabia is very interesting. Turkey is very interesting. So there's some very large markets that there's many tens of millions, if not maybe even 100 million Bitcoin investors in these markets. So that's where we're trying to break into. Those things take time. But we do think this trend of Bitcoin being accessible through the legacy capital markets is going to be the driving force of adoption over the next several years.
You have been through a lot of cycles. The last time you were on with us in December, you talked about buying Bitcoin at $10. You've seen 5 different declines or drawdowns of 70%. I'm just wondering, that was then, this is now. Things are different with more publicly traded companies. There's legislation in Congress making its way through Washington. Your share is down 99% from their 2025 high. Would you consider actually selling any Bitcoin holding right now?
Well, we're not considering at this moment. I mean, I think every single company has to manage their balance sheet, manage their risk for all market environments. You know, you mentioned it. This is my 5th Bitcoin downturn. I think we're down roughly 40% from the all-time high. We're down 30% for the year. Back in the day, there were days where we would be down 50% in 6 hours. So the maturation and maturity
but the market cap of the industry was so much smaller. The market cap of Bitcoin then was so much smaller, and it didn't seem to have the institutional buy-in. Spot Bitcoin ETFs didn't exist there. That kind of felt like a different time, right?
Sure. But I mean, I think every phase of Bitcoin's adoption has felt like a different time. Even when you look at institutional adoption right now, it's still very small relative to how big it can and will get. You know, I think you have to zoom out and ask the bigger question of why has Bitcoin performed so well for the past 15 years? I mean, I think it's because people want a form of value, a form of money that is isolated and insulated from our political system. Bitcoin is math-based money, and you know, if I'm a long-term value investor, I look at today's Bitcoin price and I see something that's a great value rather than something that's distressed. You know, I think what this pullback in the price is really highlighting is Bitcoin's biggest strength. That, you know, when there is a crisis in Bitcoin or there's poor market performance, there's no Federal Reserve to step in. There's no backstop for the market. The only thing that backs the Bitcoin price is investors willing to step up and buy. And so there's a free market here that I think is fundamentally different than any other market in the world. And I think the market is only going to keep growing.
So, David, you say it's insulated from politics, but we know that Bitcoin really took off after President Trump took office and declared himself the most pro-crypto president ever. And we see the price action since then as well. Bitcoin has given up almost all of its gains since the president has been elected and took office. How is it not tied to politics then? Because you have a president who is pushing policy, who is pushing for legislation in a way that the previous administration didn't.
Well, sure. I think you're highlighting my point. We have a great political environment, yet the Bitcoin price hasn't followed. You know, I think generally speaking, why we're excited about having the crypto president in office is because we've been fighting against the system for the past decade, and we want to have the system instead work with us rather than against us. So, you know, I think that's just the beginning of a broader trend of the global markets and global nations around the world becoming more amenable to Bitcoin and its growth in their local market. But yes, at the end of the day, there's nothing backstopping the price of Bitcoin rather than the hundreds of millions of people who own it around the world. There's always a clearing price for Bitcoin. There is always a bottom for Bitcoin. So I think we're right now watching that play out. We'll see, you know, how far the price of Bitcoin goes down before it finds that bottom. But from, you know, my perspective, when I look at what other assets can we comp Bitcoin against, Bitcoin is really, it's gold for the next generation. It's gold for the young investor. And when you look at what's happened in the price of gold over the past year, it's gone up dramatically. For Bitcoin to reach parity with gold, you would need something like a $2 million Bitcoin price. So I think there is a lot of upside in the underlying value proposition of Bitcoin. I think if you look at it comparable to any other asset, it's become a better value. And I can tell you, like for me and for investors who have been around in this industry for a decade plus, we're buying Bitcoin and we're eager to buy it.
What, you're buying it, like how much are you buying? When are you buying? What's the price that you want to be? I mean, obviously you want to buy it lower and you want it to go higher, but just give us an idea of where you're buying.
Yeah, I mean, personally, I'm buying it. Nakamoto, the whole point of our company is to accumulate Bitcoin onto our balance sheet and to be a buyer. That's part of the reason that we're excited about this transaction is that now, you know, with this merger complete, we'll have income at our holding company. And with that income, we can use it to buy Bitcoin. But I think just broadly, if you talk to large investors of Bitcoin, people who hold a lot of Bitcoin, people who are down a lot of money over the past 6 months in Bitcoin, their confidence in the asset is not shaken at all, and they're trying to buy as much Bitcoin as they can.
So if you're buying Bitcoin, I'm curious whether you've considered buying DATs, digital asset treasuries, whose share prices are now trading below the value of their Bitcoin holdings. It would basically allow you to buy their Bitcoin at a discount, no?
Yeah, absolutely. I think you have to drill into the details of each of these treasury companies. They're not all the same. Some of them have different risk profiles. Some of them have different, what you could consider expense ratios effectively for operating them. But yes, there's some significant value across the treasury company landscape. I predict that this year we're going to see a lot of consolidation in that space. And if I look back over the past 13 years I've been in Bitcoin, the greatest opportunities and where the most returns are made is by investors that step into a market where other investors are fearful and they look for opportunity. And so that's exactly what we're trying to do with Nakamoto. I think that's going to happen across the treasury landscape. And for those that execute and take advantage of the moment, they're going to come out the other side of this winners.
What about American Bitcoin? You're an investor in American Bitcoin. We spoke about this in December when you were on. That stock down since September, close to 90%. Do you regret that investment?
I don't regret it. And I don't know people like to mark the price of how much something is down from the all-time high. I'm not sure how much it's down from where we invested. I actually think it's up a little bit. But in general, we're looking to back great entrepreneurs, great operators who have a business model that makes sense, that can thrive over a long period of time. If we were worried about what happened to the investments that we made over a 6-month period with the price, we never would have made it the past 13 years in Bitcoin. So it takes conviction to make money in this space. This is, people always say, Bitcoin's up so much. It's so easy to make money in Bitcoin. It's moments like this that I think highlight why it's difficult to be an investor in this space. You have to have conviction or you get scared. It's
the lowest since April 23rd of 2025 today. So I don't know when you made that investment, but that can kind of answer the question. When did you make the investment?
Well, we participated in their pipe. I'm not sure where their pipe was relative to the current price. I think if I remember correctly, it was around $1. But I don't know. We make a lot of investments at UTXO Management. We've made well over 100 different investments. All of our investments have suffered over the past 6 months. So I'm not trying to avoid your question, but I think we're very bullish on the team. They've executed very well. They've grown their Bitcoin balance sheet.
Right.
I think they have a compelling leadership team with a great track record.
So clearly you have a lot of big plans for Nakamoto. You've been making a lot of investments. Any plans to raise funds for Nakamoto?
Yeah, absolutely. And not only to raise funds, but we want to do additional mergers. So, we have a pipeline of opportunities that we're looking at right now. And, like I said earlier, the best opportunities come in market conditions where others are scared. And so we're going to be active this year, rolling up additional companies, growing our EBITDA, growing our balance sheet. And we see some pretty incredible deals that are out there.
Nakamoto Chair and CEO David Bailey. David, always love it when you come on the program. Thanks so much for joining us on Bloomberg Crypto. Hey, coming up, more headlines today from Gemini Space Station just lost its COO and CFO and CLO. This after recent job cut announcements. Who's left? The Winklevoss twins.
The Winklevoss, all right.
They're left. Shares taking a hit today. We're going to have the details on the other side. And to access all the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg.
A complete overhaul of the C-suite at Gemini Space Station. As a result, we're seeing shares of Gemini fall dramatically in today's session. So the company's COO, CFO, and chief legal officer have all just departed months after the company founded by the Winklevoss twins went public. Our Monique Molima has been reporting on this. Monique, I don't mean to sound sarcastic, but who's left in the company right now?
So there are still some people left in the company. The Winklevoss twins, for one. Cameron Winklevoss will be taking over some of the responsibilities of the COO, who was also a board member and is leaving his board position as well. So they still have some people around, but the company is, you also know, announced earlier this month that they were also laying off 25% of their staff. So this has been quite a big shift in terms of the makeup of the company.
What's been the challenge for Gemini Space Station? It's obviously prices are down, but as the piece for Bloomberg News points out, in this announcement and in these announcements, they don't mention the actual asset class being under pressure as a reason for the business changes. What's happening at Gemini Space Station? I mean, look at that, the stock down, just since September of this year, more than 77%. September of last year, excuse me.
So for Gemini, part of it is the change in the crypto markets. That's weighing on all of the exchanges. We're seeing less transactions, less transaction value, and also for Gemini's own holdings, the fair value of Bitcoin and Ethereum decline. But Gemini has specific challenges. They are still not profitable as a company, so they're still experiencing earnings loss. Analysts also point out that the company also has negative free cash flow, and they've really been struggling to return to growth ever since their earn program faced some scrutiny a number of years ago. So that's been really a big focus for investors, is they want to see this company be able to turn a profit, be able to grow in a way that it hasn't been able to do so far.
So Gemini, in looking for growth, looking for some kind of growth driver, did gain a U.S. license that would allow it to offer prediction markets in the U.S. Can prediction markets save this company?
I think that's definitely Gemini's hope, that their prediction markets is going to be a growth driver. We've seen across the crypto space a lot of companies make announcements of these new types of products as this market has really been growing. But that's not alone going to be able to kind of drive enough growth at this point. A number of analysts do have some concerns about them really getting the balance sheet under control, and that is something that the company is working on. But the focus remains that they need to be able to improve their cash flow. They need to be able to improve their profitability. And one analyst at Truist actually said today that with these departures and this negative cash flow, it raises some investor concerns about solvency.
All right, well, we know you will keep following it, as will the entire team over at Bloomberg News. Bloomberg's Monique Malima bringing us the latest. She's joining us from Toronto. Well, coming up, the crypto winter reaching the tropics. El Salvador's president, Nayib Bukele, continues to buy Bitcoin, even as the IMF financially supports the country. Now investors worry that Bitcoin's fall will complicate El Salvador's dealings with the IMF. This is Bloomberg.
I'm Nora Melinda. Let's take a look at your midday movers. First up, the S&P 500 is whipsawing as anxiety over the outlook for artificial intelligence sparked renewed volatility in tech giants. Investors are growing increasingly concerned that big tech companies will keep borrowing until it hurts in the battle to develop the most powerful AI. And the fight over Warner Brothers Discovery continues. The company agreed to reopen negotiations with Paramount Skydance after Paramount proposed both raising its bid and sweetened other terms of its offer. Netflix has granted Warner Brothers Discovery 7 days to weigh Paramount's proposal. Still, Warner Brothers is recommending its shareholders vote in favor of its already binding agreement with Netflix. Warner Brothers wants to see Paramount's new bid in writing and will discuss unresolved deficiencies in the offer. Netflix will have the option to match Paramount's offer if Warner Brothers deems it superior. And finally, Coinbase and Robinhood shares are swinging between gains and losses after Mizuho slashed its price target on the two amid a crypto rout that's fueling an exodus of traders. While it's not yet clear when the traders will return, Mizuho says in the meantime, Robinhood is better positioned than Coinbase due to its lower reliance on crypto revenues. Those are your midday movers. I'm Nora Melinda.
It is time now for Money Rewired, the overlap of digital assets and traditional finance. And today we're looking at El Salvador, where the crypto winter is reaching the tropics. President Nayib Bukele famously moved to make Bitcoin the nation's legal tender back in 2021. Now, investors are worrying that Bitcoin's decline will complicate El Salvador's dealings with the IMF. The country's credit default swaps to insure against potential default are now at 5-month highs. For more on this developing story, let's go to Michael McDonald. He covers Central America for Bloomberg and joins us now from the region. So, Michael, when it comes to the IMF's comfort level with how El Salvador is managing its finances, has it said anything with regards to El Salvador really putting all its money into Bitcoin and continuing to buy Bitcoin?
Yeah, thanks for having me. So, when El Salvador signed this IMF deal with the IMF a year ago, part of the program was to stop accumulating Bitcoin in what El Salvador calls its strategic Bitcoin reserve. At the beginning of the program about a year ago, it appeared as though El Salvador was merely consolidating Bitcoin from various governments' wallets into the strategic reserve, so it didn't look like it was net accumulation. However, that thinking has started to change, and now it appears that El Salvador has continued to buy 1 Bitcoin a day, which was a promise it made in 2022 after it made Bitcoin legal tender. Sometimes it buys in big chunks. In November, they bought 1,000 Bitcoins and added them to their strategic reserve, and that reserve now sits at 7,500 Bitcoin. And amid the collapse in Bitcoin's price, those Bitcoins are now worth 500 million, down from a peak of about 800 million last year. So it has wiped out quite a bit of value.
Politically, not just with regard to the IMF and credit default swaps, but politically within the country, what does this mean for the popularity of the president, and what does it mean for the way people think about their own country's finances?
Yeah, Bitcoin was never really big in El Salvador. The idea was that it would be used as legal tender alongside the dollar or to replace the dollar. It was never really used that way. In order to secure the program, El Salvador actually passed a reform that stripped Bitcoin of its legal tender. It's now voluntary for businesses to accept it instead of mandatory. Nayib Bukele has consolidated a lot of power over the last couple of years. He shrank Congress from 100 and some lawmakers down to 60 some lawmakers. He changed the Constitution to sort of change the time frame of elections. So he remains really popular, not necessarily because of the Bitcoin stuff. He remains really popular because he's led this crackdown on crime.
Yeah.
The Bitcoin stuff, it really never was popular with El Salvadorians on the ground, but he has done some other stuff to really shore up his support. So, it was never, the rollout was a little bit bumpy, and it was never really used widely.
So if the country will continue to buy 1 Bitcoin a day, does that put its IMF deal in jeopardy? I mean, could the IMF basically drop El Salvador and leave it with fewer options in terms of funding?
It's a possibility. There is the possibility that they renegotiate some of the terms of the deal. There are 2 reviews pending with the IMF and El Salvador that haven't been approved yet. The IMF has said they're trying to understand these transactions at the Bitcoin strategic reserves and sort of figure out really what's going on with them. El Salvador hasn't really published any public data or transparency around where these funds are coming from, which addresses they are using to buy these funds. So there are quite a bit of issues that the IMF is trying to understand. It could lead to a renegotiation of the program. They could delay the program indefinitely, and El Salvador might have to rely on other sources of funding, such as multilaterals, or even bilateral support from the United States. Bukele is very close with the White House, and he's a close ally to Donald Trump. So that's a possibility if they don't get this IMF funding. But as of right now, there are 2 pending reviews of the IMF that have been delayed, and it looks like there's no clear sign on the horizon as to when those might get approved.
All right, Bloomberg's Michael McDonald, thank you so much, joining us from Costa Rica, covering, of course, Central America and the Caribbean. Coming up next, the SEC giving the DTCC the okay to tokenize stocks. We're going to discuss with the CEO next. This is Bloomberg Crypto. Welcome back to Bloomberg Crypto. I'm Scarlett Fu alongside Tim Stenovic. It is time now for the token moment, where we dive into tokenization. U.S. regulators in December gave the green light for a new service that'll take a crucial step toward moving some stocks, bonds, and treasuries onto the blockchain. The SEC gave the Depository Trust and Clearing Corporation, also known as DTCC, permission to custody and recognize tokenized equities and other real-world assets on-chain. Joining us now to discuss is DTCC CEO Frank Salla here with us in studio. Great to have you here.
Good to be here, Salla.
So a lot of letters.
I know,
I'm just impressed. I'm glad you had that.
We got a lot of acronyms.
Yeah.
How is the effort going at DTCC?
It's going well, right? I think what's most important is tokenization of assets is really happening, and it's moving much more quickly. I think after the Genius Act passed, we got some clarity on stablecoin. The industry really began to coalesce around how do we use this new technology of cryptography and blockchain and continue to advance it for traditional assets. So being a bridge from, TradFi to DeFi is something that, because of who we are, we're right in the middle of it. But it is definitely going.
I think a lot of people who may not be enmeshed in this world each and every day might still have the very basic question, that is, what is the problem tokenization solves?
Yeah, absolutely. And it's a very fair question. And we ask ourselves that question, and we challenge ourselves, not just within DTCC, but within the industry every day. And I think we like to go back to where we came from. Assets, stocks, bonds, treasury, they are digitized already. We in the industry, and particularly at DTCC, we move bits and bytes. That's what we do. And it helps in terms of, the velocity of trades, being able to scale. and at the same time maintaining a risk in the sense of controlling it and making sure it doesn't, not to the detriment of investors, which ultimately is what we're all concerned about. But what I would say is, as we move to blockchain, what blockchain can do, it can move securities back and forth in a much more instantaneous way than even the current method can. We can move away from batch processing, which again is just bundling data and then moving it, processing it all together. But I think more importantly, if we can move assets instantaneously and move cash instantaneously, it reduces counterparty risk, which for the industry, especially the numbers that we're talking about, is enormous. And as you know, the US capital markets is big. As the world economy grows, wealth grows. As wealth grows, capital markets grow. So capital markets will continue to grow, and that risk will continue to grow. And we think blockchain is a really good solution to help mitigate that risk.
And we should be clear that the DTCC plays a major role in the U.S. financial system's plumbing. You serve as the central clearing and settlement hub for equities, for fixed income, for other products. When it comes to participation in this tokenization service, tell me about the kind of demand you're seeing from retail investors versus institutional investors in the U.S. and those overseas.
Yeah, it's both. And what I mean by that, Scarlett, is clearly institutions are very, very interested in it because of what I just said, the size and scope of moving. I think retail investors are interested in it because it's more instantaneous and it could actually help them do things that they want, which is 24/5, 24/7 trading, which many investors, even outside the United States, are very interested in. It's a way they can access capital markets. So I think the key is that. I would also say that within blockchain, if you could move it and keep it centralized, it's even better. So to your question about the role DTCC plays, we hold $100 trillion of assets for the industry. They're with us. And what happens is in the early stages of this, of moving to blockchain, we began to see what I think of as disaggregation of assets. So you would create different platforms of blockchain in different areas. So what was happening is we were seeing the disaggregation of assets. And when you disaggregate assets, you actually disaggregate liquidity. And when you disaggregate liquidity, you actually impact price discovery, which is not good for institutions nor retail investors. So because we're the common denominator of all those assets, we felt, and that's why we went to the SEC and received the no action letter that you referred to, we can tokenize everything at its base and then allow it to run on any L1 blockchain that institutional investors and end investors want to operate on. So we're providing choice. And because of who DTCC is, it's clearly in our mandate to help the capital markets innovate and evolve.
What about when it comes, just very briefly, what about when it comes to private assets? This idea of tokenizing private assets, it's something that Vlad Tenev at Robinhood has talked about quite a bit. Is that something that you're bullish on?
I think he's right about that. Because if you think about, and it's the next step after you do public assets, right? Because private assets by their very nature are, they're disaggregated for a lot of reasons, which we can get into. But if you're able to tokenize those private assets, and by the way, private assets can take a lot. They could be private companies. It could be art. You can fractionalize art on the blockchain. There's tremendous value in that. You can fractionalize antique cars. So there are a number of different types of asset classes that this technology will afford investors to get into. And by the way, not just institutional investors, but retail investors. That's the power of a lot of this technology, besides taking risk out of the system.
DTCC CEO Frank Salla joining us here on set. Coming up next, Neha Narula, director of MIT's Digital Currency Initiative, joins us to discuss her latest paper on stablecoin risks. This is Bloomberg.
We're about halfway through the trading day in New York. I'm Nora Melinda. Let's take a look at your midday movers. First up, the S&P 500 is whipsawing in today's session, erasing most of its losses. This comes as volatility is picking up in major tech stocks. Investors fear companies may stretch their balance sheets in the race to build the most powerful models. Also, life sciences company Danaher agreed to buy medical equipment firm Massimo in a deal worth about $9.9 billion. The transaction is expected to be completed in the second half of next year and should allow Danaher to gain a foothold in the medical supply business. The firm will pay $180 per share in cash for Massimo, which is close to a 40% premium over the closing share price on Friday. Shares of Danaher are falling while Massimo surges for double-digit gains. And Norwegian Cruise Line is also jumping after activist investor Elliott Investment Management said it built a more than 10% stake in the company. Elliott also sent a letter and presentation to Norwegian's board urging changes to unlock what it believes is more than 150% upside for shareholders. This follows a sudden CEO change at Norwegian. Its fourth quarter results are due March 2nd. And crossing the terminal just moments ago, New York City Mayor Zoran Mamdani is proposing to raise the city's property taxes for the first time in more than 2 decades to fill a roughly $5 billion budget gap. The pitch is expected to be unveiled this afternoon as part of his preliminary budget proposal. Those are your midday movers. I'm Nora Melinda.
Well, it's time now for the odds, a look at the prediction markets. As companies eagerly await regulatory clarity, CFTC Chair Michael Selig says the regulator is taking action to assert its own authority over the space. This morning, he posted a video saying as much.
American prediction markets have been hit with an onslaught of state-led litigation. In response, the CFTC has today filed a friend of the court brief to defend its exclusive jurisdiction over these derivative markets. To those who seek to challenge our authority in this space, let me be clear. We will see you in court.
We will see you in court. Michael Selig, CFTC chairman. That brings us to the odds, where we track prediction markets. Let's bring in Bloomberg Intelligence senior government analyst Nathan Dean. Nathan, how are prediction markets regulated right now? It's a question that we're all trying to answer.
Yeah, so, it's really interesting because there's been a couple of court cases that are actually going through the system right now that's saying, look, that these are gambling contracts. In fact, in response to that post on social media, Utah Governor Spencer Cox essentially said, show me where derivatives are, LeBron James rebounds, for example, and that I'll see you in court. So what Chairman Selig is doing right now is trying to get ahead of the game, where he's essentially saying, look, under the Commodities Exchange Act, these are event contracts that are permissible, and that's why we think that he's going to follow this up with a rulemaking in the first half of this year, essentially saying these are permissible within the guidelines of U.S. regulations. And then essentially, these court cases are still going to have to go through the system, and our legal analysis suggests that there's a 60% chance that the companies, that the states are going to lose, and the companies like Kalshi and Polymarket are going to succeed.
Okay, so right now it feels like the CFTC's take on this is federal rights overcoming states' rights when it comes to regulation of the prediction markets. Has he given any indication on where he might put some limitations on prediction markets?
So, it's really interesting. Not yet. So there was a proposal that came under the Biden era CFTC. This was a little bit more restrictive. They've actually gone forth and withdrawn that proposal, and there's going to be another proposal in the works. Now, he did give a speech in late January where he just essentially said high-level statements saying, look, most of these contracts are going to be permissible under the derivatives law, the Commodities Exchange Act, but we have to see what the proposal entails. Now, we do think most of these event contracts that are out here, very broad stroke, that they're going to be, at least under the CFTC's eyes, going to be permissible. So I'm not sure you're going to see much in the way of restrictions at the moment. But again, we have to wait for the details.
All right, good stuff. Nathan Dean, I know you'll keep us up to date on all of that. Nathan Dean is our senior policy analyst for Bloomberg Intelligence, joining us from Washington. All right, the Digital Currency Initiative over at MIT released a new paper examining stablecoin risks. The team writing, quote, durable stability will likely require an integrated approach spanning financial market infrastructure, prudential regulation, and software governance. Joining us now is Neha Narula. She is director of the Digital Currency Initiative over at MIT Lab. So your take on stablecoins is even those that are conservatively backed can face stress. Just walk us through, first of all, the potential stressful situations that these stablecoins might encounter.
Okay, Scarlett. So I think to start, you have to understand that The whole goal of a stablecoin, US dollar-backed stablecoins under Genius, is to maintain par value, meaning a stablecoin's worth $1. And so what we wanted to look at is what are the risks that could cause that promise to break. Genius covers something very important, which is what are the assets backing the stablecoin? Does a stablecoin issuer actually have the treasuries, the bank deposits, whatever the assets are to back it? But unfortunately, Genius still misses a lot. Namely, there are these other issues like are the markets behind those assets still working? Are you able to get in and out of those assets? And importantly, does the operational infrastructure behind the stablecoin still work? And here we're talking about decentralized blockchains. Because if those pieces aren't also working, then people won't be able to get in and out of their stablecoins, and the promise of par value exchange could break.
So Neha, if you were able to make some policy recommendations to Washington, what's a way to solve this in your view? How could they do it?
So I think we need to look at more than just solvency and assets backing stablecoins. We have to think about the market infrastructure. So that's an important piece of that. In addition to that, and this is going to apply to more than just stablecoins, this is going to apply to all tokenized assets. We have to think about the decentralized blockchains behind them. All blockchains are not created equal, and right now there's no indication for how users or stablecoin issuers or other market participants should think about these different blockchains. What's the security behind them? What's the validator set? How likely are they going to be able to operate correctly in times of stress? So we also need to think about those core issues.
So the Genius Act kind of gets us started here, but it doesn't answer a lot of questions. What's needed in terms of the crypto market structure bill that might start addressing some of those issues?
Yeah, so there's two different parts here. There's what actually is going to happen in law and in Congress. And then there's what's left to the agencies and the other actors that are going to have to fill in a lot of the gaps. So with Genius right now, there's a lot of work that's going to need to be done by the OCC, by the Fed, by other regulators to kind of actually implement the details here where the rubber meets the road. And the same thing's going to happen with the crypto market infrastructure bill. So everyone's really focused on interest right now. Can stablecoins pay yield? But there's so much more behind that. And I want to make sure that these bills have a lot that protect the user, make sure users understand where their assets are when they operate on these decentralized infrastructures, and that the centralized intermediaries behind all of these tokenized assets are doing what they're supposed to be doing.
When you look out across the landscape right now, are there certain stablecoins that you would say are companies that are doing this the right way?
I think that the companies are trying, but it's move fast. There's a lot to do, and I'm not sure they're thinking. For example, with stablecoins like USDC or USDT, so put out by Circle and Tether, are they informing users exactly which blockchains they're using? Are they explaining the security assumptions behind these different blockchains to the user? Can the user even understand this? These are important questions that I think are not being addressed right now, but in order for this industry to mature, we're going to need to get there.
Stablecoin obviously is not the same as Bitcoin, but I wonder if all the price volatility we're seeing in Bitcoin and crypto overall might have some impact on stablecoins and, the ability for them to be liquid instruments for investors, for users.
Scarlett, absolutely. So yes, very important to say that stablecoins are not cryptocurrencies. They are backed, usually, at least under Genius, by assets like treasuries and bank deposits. But at the same time, these stablecoins operate on the blockchain rails. That means to make a stablecoin transaction, you have to pay fees on the underlying blockchain. We're seeing a lot of volatility with Bitcoin right now. There's been a big price decrease that affects all cryptocurrencies. They sort of all move together. And so you're going to, these are going to have real effects on stablecoins and on the underlying security behind the decentralized blockchains on which they operate.
Does it, and to kind of build on Scarlett's question, does it, decrease the normal person interest in a product like this? If you get burned with a big decline in an asset price, do you get scared away of the entire industry? Do you lump it all together?
I think we're definitely seeing that happen, right? A lot of people are saying, hey, price decrease equals sentiment. And
right.
So, if price decrease is saying that there's less interest in this area, should I still be thinking about tokenizing my assets? There's a little bit of that, but then there's also, I think, a lot of understanding among the more mature market participants that have, quite frankly, been through a lot of crypto winters, where they understand that the price is going to go up, the price is going to go down, that what we're here to do is to create real value. So we need to find the real use cases where this technology helps make things more efficient, more accessible, and we need to push on those use cases and not just rely on the price and speculation.
Neha Narula over at MIT's Media Lab. Always good to see you, Neha. Thanks so much for joining us.
All right, coming up next on Bloomberg Crypto, the case for Bitcoin as digital gold continues to break down, in fact, as it follows the downtrend in software and gold pulls away. We're going to take a look at the charts next. This is ETF. No, it isn't. This is Bloomberg Crypto.
Well, the, quote, digital gold narrative is cracking under the weight of Bitcoin's recent price action. It's trading a lot more like software stocks than gold. James Seyfert has been writing about this for Bloomberg Intelligence. He joins us now. In a world where AI threatens software stocks, the comparison to software stocks isn't really a good thing, James. Yet we do have people coming on our program week after week still calling Bitcoin digital gold. Did what happened with Bitcoin over the last 6 months prove that it's not digital gold?
Maybe a little bit, but probably not. I guess my argument would be if you look at the underlying characteristics of what Bitcoin is and what it's trying to be, it meets a lot of the characteristics of digital gold. It even does plenty of things better than gold itself, as far as like when it comes to moving the asset around the world and things along those lines. Divisibility, I could go on, right? But the one thing it's not doing well is that it's not as stable as gold is, and it's not performing as well, nearly as well as gold over the last year. But you go back a few more years and the comparison becomes a lot closer. I would say no matter what its proponents are arguing, even what my own personal beliefs may be, the market doesn't view it as digital gold. It views it as a risk asset. And it's become very correlated, at least since this summer, to software stocks in particular, which, as we've talked about many times and as many other people have talked about, it's not been a good time if you're a SaaS software provider.
No, it hasn't. So when we look at software stocks and you see them tumbling and we see Bitcoin tumbling as well, another thing you've noticed in addition to price action is trading volume, and Bitcoin's trading volume pretty much mirrors what we've seen in software stocks when on the upside and on the downside. What do you think that tells us? Do you think that people who are investing or trading software stocks are the same who are investing and trading Bitcoin?
Yeah, this has been a huge criticism of Bitcoin for years now. I mean, even some of the biggest proponents have said one of the biggest drawbacks for Bitcoin in their view right now is that it's correlated to risk asset. I mean, we could go back 2 years and people were talking about how it's correlated to the NASDAQ. That correlation breaks down. Like every time it gets correlated to something, it kind of breaks down over time, right? It doesn't stay correlated. Right now, for the last 6 months, it's been correlated to software stocks. My expectation is that's probably going to break down at some point. Unfortunately, I don't know exactly when that breakdown is going to happen. Yeah, so I mean, at the end of the day, the market is viewing this as a risk asset, and that's the way it's being traded. Could it be possible that the same people trading or were in the similar positions to SaaS and software are in positions with Bitcoin? That was the argument for why it was correlated to NASDAQ. It was tech, it was Silicon Valley. People who tend to like those stocks and believe in them were buying Bitcoin. And now as that's going down, it's going down together. So maybe the holder base is overlapping. There's some people think there's hedge funds that had massive positions because they saw a correlation here and it blew out with all the volatility. But no matter how you slice it, like you said, the volume, it's not just the price performance. We're also seeing huge spikes in volume right around the same time in both of these assets.
Hey, James,
or asset classes and assets.
We have about a minute left with you, and I just want to get your thoughts on Ether. It's down about 60% from highs in 2025. We spent a lot of time talking about Bitcoin, but you've been writing about Ether too. What's going on with Ether?
Yeah, I mean, Ether is, in the last less than 12 months, it's seen two 60% plus pullbacks from all-time highs. So, I mean, it's not holding up nearly as well as Bitcoin, and obviously Bitcoin isn't holding up that well. And one of the ways I like to look at that is just understanding what's going on with the flows. And for the most part, most of the money has stuck around in the Bitcoin ETFs. The Ethereum ETFs are having a bit of a harder time. Only about 12 to 13% of the money that went into Bitcoin ETFs since their launch has come out over the last few months. On the flip side, Ethereum, they've seen seen about almost a quarter of the money that has come in. So they peaked at about 15 billion in inflows, and now they're under 12. So they're struggling a little bit more. But on the flip side, we're not even seeing buying in these Bitcoin and Ethereum ETFs for the most part, but we are seeing tons of dip buying in IGV and software stocks.
All right, James, really appreciate your joining us. James Seyfert of Bloomberg Intelligence giving us the ETF take here on Bitcoin and Ether as well.
So there's some ETF IQ in crypto.
There you go.
You know,
it's emerging in my world.
Yeah.
All right, that does it for Bloomberg Crypto this week. Join us again next week, same time, same place. This is Bloomberg.